He paid $620 in 2022. Here we are, the end of 2024, going into 2025, and he's got on the market for $599,000. If this story that I'm seeing, boots on the ground in real estate, is happening in Sacramento, where else in the country is it happening, right? Homes are not able to sell for what they were purchased for in 2022. I'm going to tell you the truth about home price appreciation, what I'm seeing in my market, and I'd love to hear from you. What are you seeing in your market around the country? So let's jump straight into it. As most of you know, I'm a mortgage broker. For the last 10 years, I've closed over 2,000 transactions, and I'm giving you real honest takes from boots on the ground. I'm talking to real estate agents every single day. I'm talking to buyers. I'm talking to sellers. I've got real life stories, and we're licensed in 48 states. So I'm doing business all over the country. Greatmortgagebroker.com if you want to connect with me and my team. So I had a conversation today. Most of these videos start off as I have a conversation, I start to see a trend, and I'm wondering, like, no fancy graphs, no, data from 7 different sources on home price appreciation, what homes are doing, really just real stories from the street, right? And so I've got a buyer who's looking at a home, really nice home, and it's listed at $599, been listed for a couple months. It's in a great neighborhood, and the price has come down. I think the seller started in the mid 600s, lowered it to 629, just recently lowered it to 599. Why are home prices coming down, or at least the listing prices? Because it's harder to sell a house when the person on the buy side has to go out and get a 6.5% or 7% mortgage. There's no big secret right there. And so I'm trying to figure out if this is a trend, what we're likely to see going forward. And so in this video, I'm just going to talk through my thoughts, what, one mortgage broker who's talking to hundreds of people, thousands of people, honestly, every single year is seeing. So let me just show you a couple examples of this. Now, I'm not using the house that I just mentioned in my examples. I might, it's all public data, right? But I popped into a local zip code and I looked at like what has sold in the last 3 years to see if my hunch there's more than one example for it too. And I think that there's plenty of it. One caveat I'll give you is that we're in the winter months where, generally speaking, every single year home prices go up through spring and summer, and they come down through fall and winter. They go up spring and summer, they come down fall and winter. So comparing a February, March, April, May, June sale to what we're listed for, what we're selling for in December and January isn't really fair. It's a little bit of cheating, but if you're a buyer, it's good news for you, especially if you're buying right now. So let me pull up a quick example, and then you tell me if you're seeing this in your market. This is something that, all public data, June of 2022, sold for $575. Great neighborhood. I know this neighborhood well. Own some rentals there. Lived there for the last 44 years, 95826. And so June of 2022, those of you who aren't familiar, this is the summer that we really started to see rates increase. And what happened to buyer sentiment and buyer psyche is that as rates went from 3 to 4 to 5, people were like, oh my gosh, I've got to buy a house before rates are too expensive. This summer specifically of 2022 was pretty competitive. And there was a lot of people, not the hysteria we saw in 20 and 21, where people were bidding $100,000 above ask on $500,000 houses, but still a little bit of hysteria, overbidding and whatnot. So this house sold for $575. Since I know this neighborhood well, I can tell you, I don't have to rely on a Redfin estimate. A 3-2, 1,400 square feet, depending on condition, probably is going to sell for $550 right now. Now, if you paid $575 and you got relocated for your job or you had to move, you know that selling real estate involves fees, title company, real estate agent and such. You would lose money if you sold this thing today. If I looked in 95826 and I tried to find some examples of, how long ago this thing sell for 611, Where did it go? I just clicked on it and it's gone. I'm just finding random ones. So if it's sold too recent, I'm not going to use it in our examples. But March of 22, this sold for 580, 2,000 square feet. Quite honestly, that's going to sell. So proving that this is me just poking around, not all are going to necessarily be things that would sell for less than they sold for in 2022. This one just sold in May of 24, so that's not a good comp. Here's one that I was speaking about that sold for 620 in February of 2022, and it's active, so I got to scroll down to see the past sale. There we go. For 620. Just reduced to 599. Great house, great neighborhood. And if this person sells it in the winter of 2024, they are going to lose money. So what does all of this mean? I've got a couple different things and a couple takeaways for you if you're listening. If you're a buyer, one, buying in the winter is always fun. You always are going to probably pay 6, 8, 10% less than you would in the spring when a lot more buyers are out. It's more competitive. The sun is shining. People are walking through open houses, et cetera, et cetera. So if you want deals, buy in the winter. That's lesson number one. Lesson number two is, in the current market, do not count on home price appreciation. If you're buying something for the short term, which is the whole reason I'm seeing some of this bought in 22, selling in 24, type of thing where people, quite honestly, with net fees are losing money. It's another reminder, in case you didn't know, that real estate's not a short-term play. If you're going to buy and sell in a short window, there is the chance that real estate stays flat, loses 5% of value. It doesn't always win. When people talk about real estate being an asset that you can count on to outpace inflation, to always go up in value, it is over a long enough time horizon. If you're going to own it for a decade or 15 years or a few decades, you're almost always, and I say almost always, it's really always. You look at any period and you add 20 years to it and see what the home sold for 20 years from the purchase date, like it's never less. Even the peak in 2006, bought our first house in 2006. It seemed like crazy to think that we would pay $345,000 for the house that we did when everybody foreclosed around us and everything sold for $180. It looked like, oh my gosh, I'm an idiot. Why did I buy real estate in 06? Still own that house today. It's worth $550,000, so it's worth $200,000 more than I bought it for. It got refinanced into a great looking mortgage. So it worked out because we held for long enough, right? For these scenarios that I'm looking at and these examples that I'm using, and I'm sure you can find them all over the place, in Austin, Texas, in Fort Lauderdale, Florida, all over the country, where the peak might be a different time for an individual market, but 2022, when money was cheaper, when the mortgage rates were cheaper, between probably February and June is where a lot of the highest price could be paid because of the cost of the money. And so you compare that price to a winter of 24 price, in a lot of markets, in a lot of cases, it's equal to or less than what it cost back then. And so if you're in a pinch and you need to sell, job relocated, marriage didn't work out, it's an investment property and you got laid off from your job, and you need to sell for that reason, short-term real estate, can stay flat like it has. And so parting words of wisdom, future advice, with rates slated to be higher for longer than most people expected. A lot of the future forecasts now have the average interest rate in 2025 somewhere in the mid sixes. Safe to say, an average, even if it starts in the sevens and ends in the low sixes, an average with a six handle in front of it is the high likelihood for 2025. That is more expensive money than we had back in 22, and not as many people can buy. Demand is down. I wouldn't be surprised if a lot of markets stayed relatively flat. Now, flat, reminder, like I talked about, up in the spring, down in the fall. A market that has 0 to 4% home price appreciation from 1 year to the next isn't just 1/3 of 1% per month. That's not how it works. A market might go up between the beginning of the year and June by 8 to 10%. And then it might go back down from July through December, 6%. Net for the whole year, you gained 4%. But it wasn't 1/3 of 1% every month, a straight line up. It was up 10, down 6. Up 12, down 5. Up 14, down 6. That's kind of how real estate works. It's not just a straight line. So hopefully this video was helpful and you learned something. If you have any questions, feel free to reach out to me and my team, greatmortgagebroker.com. That's how you connect with me and my team. Leave your comments down below. What are you seeing in your market? I'm interested to hear it, and we'll see what happens. We've got an interesting real estate market ahead where buyers, for the time being, have leverage. We'll see how long they have leverage. Stay tuned. Talk to you soon. Bye-bye.